Ladies and gentlemen, we're back at it again. Today we are going to be talking about how to think and trade in probabilities so you can become the casino and trade with an edge. This is the most important concept a trader needs to understand on their journey to become a profitable trader. This is one of the main concepts that separates the traders from being profitable and consistently losing money. So we need to make sure we watch this and understand this full video at length. Let's get into it because you walk into a casino, you understand there is a house edge. These guys are making hundreds of millions of dollars a year off of a selection of games: roulette, baccarat, blackjack, sports betting. All these games have a 0.5% edge to a 5% edge, a 0.5% to 5% house edge, yet these guys are making hundreds of millions of dollars a year. How is that possible long term? Well, in order for them to hold, say, a 5% house edge, they need to be making sure that they are consistently giving the player and the casino the same odds. But that's all they need. They just need a small percentage because they know over the long term that gambler is going to blow up his bankroll. He's going to do poor money management. He's going to be chasing his losers. These are all common traits that you see gamblers lose money. 99% of the gamblers lose money. It's like 95% of the traders lose money. So they are very similar to one another. What's nice about trading is you don't have to put money on your, I guess you could say, your trade. You don't have to take a trade until you have a list of criteria that's based on your strategy. If you want to go play a game of blackjack, well, you have to first go up and place $5 wager, right? And then they will start dealing cards. Versus trading, you can wait for a market to set up this. Have a list of things that set up in your favor to say, hey, statistically, there is a 65% chance if these 3 things line up, if these 5 things line up, the market will go in this certain direction. So that is the mindset that we need to have. Now, with that mindset, it's a glorious thing having the ability, I must say, to wait to have all these things lined up, and then you can finally place a wager, which is take a trade. You don't have to, just take a trade out of nowhere. It's very important. So we can swing the odds in our favor by doing this if we have consistency in our trading plan. Like I said, the casino, they don't start switching rules. They don't say, okay, we're going to be hitting this time. Okay, no, the dealer's got 20, we're going to stay because the other guy's got 16. It breaks the rules. They have a systematic approach. So this is what we need to do in our trading. Now, the problem for retail traders is, they'll lose 5 trades in a row, they'll lose 7 trades in a row, and they'll system hop, they'll change a little rule here or there. They think they got some magical idea, and then it screws up their trading, and then they go into a drawdown. When really all they had to do was wait an extra 2 trades, and then they would have been a winner, a winner, a winner. You know what I mean? So hey, let's get more into this because we got to start thinking in probabilities. If we go over here, random.org coin flipper, we're going to flip 75 coins and see what each of them came up. Heads will be you win 2-1, while tails is you lose 1. So in the casino, they would never offer this because the player has a huge edge in the market. You're making 2-1 if you win a 50-50 coin toss. All right, so let's do this and let's try to think about the mindset of a trader and what they might go through. Ooh, wow. Okay, so you might start off with a win, win, then you lose, lose, win, lose, lose, lose. You're thinking, hey, that's not that bad, all right? And then you might get into a little part where it's, hey, you lose, you win, and then you get 3 losses in a row, and you win, and you lose 3 more again, right? During that spot, you'd be down money. You'd be shaking a little bit. But if we continue on, you eventually hit a 1, 2, 3, 4, 5, 6, 7, 8, 9 losing streak. I guarantee you, your mindset after trade number 5 is not going to be the same after trade number 1. Okay? At trade number 5, or definitely at trade number 8 or 9, you're thinking to your head, this ain't working, this strategy ain't working. You start looking for reasons of why you're losing so many trades. You jump to a different strategy and you start changing things, right? But you didn't let the long term play out. And instead, right off the bat, you quit. There was a winner, there was a winner, another winner, another winner, and another winner. And you just missed all these winners. Okay? So it's important for us to have the exact same rules every single time. And this is how we can flip the edge in our favor when it comes to trading. We need to be thinking with a probability-based mindset. Like I said, you go into a casino, you can't tell the dealer, deal 2 cards and I'll decide if I want to play. You can't do that, okay? But in trading, you can do that. You can line up moving averages, you can line up stochastics, you can line up support and resistance. You can line up everything in your favor. So what I mean by this is you could have price sitting inside a supply zone right here. So this was our analysis a couple weeks ago when prices were coming up into this area of supply. Why did I like this? Why did I like looking for selling opportunities? Well, it's coming up into a supply zone where a lot of sellers came into the market. It's also going to be testing the 200 moving average. It's also a support and resistance line. And it's also, if you kind of look, it looks like it's higher highs, higher lows, higher highs, higher lows. And each higher high is making like 200 pips, and then the lower low, the higher low, the pullback, the correction move is 100 pips. Then we get 200 pips, then 100 pips, then 200 pips, then 100 pips, right? So if prices just move 200 pips, and then we have prices reacting off of the 200 moving average, we have price sitting in a supply zone, we have price sitting off of resistance, we're trying to accumulate a bias to why the market will do this rather than that. That's all it is. The market can either go up or it can go down. So what I recommend doing is, I talk about this in actually one of my trading videos, is the 3-step trading planner, the importance of having a trading journal or understanding reward to risk and how that will affect your win-loss record, and everybody trades a little bit different. So I recommend checking those 2 videos out, and in fact, those 2 videos will be in the description below for you to watch out. So we're trying to build a case. And one way to think about it is, you know those old scales? Those old scales back in the olden days where they would measure their gold coins on one end and put gold coins on the other to make sure it's the same or whatever. Well, we can do the exact same thing. We have price inside supply. We have price reacting off of 200 moving average. We have price reacting off of support and resistance. We have the correction impulse correction wave. We have stochastics RSI overbought. So we're having a bunch of things to say, hey, look, this chart has done this. There is a 60% chance that prices will do this, right? And that's what we're betting on. And so it's important to have that same thought process every single trade. US 2000, it was the same analysis from back here. All right. Looking for a breakout retest. This supply zone came down, broke out of this sideways market. So hey, we are in a downtrend. Oh, that's another one. We are in a downtrend. We are coming back up into supply. We are coming back up to a breakout retest area, also resistance. All right, so we have a bunch of things to say, hey, these are all lined up to say prices will go down again. And we need to make sure that we consistently take that exact trade setup every single time based on your set of rules, not my set of rules, guys. Look, I'm looking at you. Your set of rules. I trade different than you trade. All right, your friends trade different than how you trade. All right, so it's important that you create a list, a trading plan. This is why I'm telling you to watch that video, the 3-step trading plan and understanding reward to risk. Those are 3 extremely good videos for you to watch and to understand how to customize a trading plan that fits to you and the importance of creating a list. Really quickly, you go into that blackjack table, they give you a list of rules, right? You look at the side of the table and it will label all the rules. It will tell you all the rules of blackjack. Minimum bet, maximum bet, what the dealer has to hit on, what he has to stand on, what the object of the game is. It gives you 30 rules and you can sit there and read them. They are following those rules every single time. They aren't switching up the rules after the house has lost 10 times in a row, okay? This is the same approach that we need to take to trading. We understand we've back tested our trading strategy. We've back tested 100 trades. We said, okay, we have a 50% chance and we are going to make 1.5 reward to risk, 1.5 to 1. We know this is a positive strategy, so we need to make sure when we're going through these drawdowns of maybe losing 6, 7, 8 trades in a row, and this is with a 50-50 win-loss difference. If you're a trader that wants to have like a 75% win-loss, well then maybe you need to have a smaller reward to risk, or you need to have an extremely good strategy. But personally, I don't know any trader that that trades 80% win-loss record with 2-to-1s. I don't know anybody. Okay, most people are hovering around 39% to 60%, and then their win-loss is different depending on how much they're requiring from the market. But like going back to the casino, they're taking the exact same trade setup every single time. So it's important that we take the exact same trade setup every single time. You take 20 trades and you show them all the pictures. Every trade setup should look the exact same. After 20 trades, if you are still not making money, go back and look, review them again. Say, hey, what's the difference between my winners and my losers? Could I create a better edge for myself? Then you have to start working on your strategy. But chances are, most people, I see it in my group from time to time, people get into a losing streak, they get upset. I understand that. I get upset as well when I start going into losing streaks. But I understand the importance of journaling, reviewing, and consistently taking the same trade setup. And so we need to adjust our mind to think in probabilities. In fact, if you go to YouTube, you go type in Mark Douglas. He has a great book, Trading in the Zone, as well as a free three YouTube videos, 1 hour long each, talking about this, how to think in probabilities. It's my favorite book. I recommend you guys check it out. And so if you guys have any questions about probability thinking, you guys can ask me down below in the comments, or you can always reach out to me on social media at Moneyball Austin. And if you guys wanted to get your free training about why 90% of the traders are losing, more about probability trading, how to approach the markets, then I recommend checking out moneyballtrading.com, where you will get all that training. That will be in the description below. All right, guys, thank you guys so much. If you did enjoy this video, I really appreciate you hit that like button. It is so important to start thinking in probabilities and taking that same trade setup every single time. Okay, have a good one, guys. I will see you in the next one. Bye-bye. Cheers.